Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. The Dow finally showed some life. He takes a look at crude, gold, silver, and the U.S. and Canadian dollars. Publisher of the VR newsletters, Mark Leibovit, discusses AI Mania, whether there's a disconnect between the stock markets and the economy, and abandoned office space. He also has a special offer for our listeners. Ian Prittie is here to talk inflation, a slowing economy, and the dangers of Helocs in an inflationary environment. We'll talk to Ross Clark right after this.
Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclico.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on Twitter at ChartsByRoss. Welcome back to the show.
Always a pleasure, Jim.
How would you describe the action on the stock markets this week?
Well, I would say that people are starting to get excited again. You know, the S&P has now managed to be up 20% off its lows, so quote unquote, people think it's a bull market. We look at the fear and greed index, it's all the way up to 78%. We haven't seen it that bullish in a long time. The put-call ratio down to levels that we haven't seen in a couple of years. And VIX, the volatility index, down to 14. So, everybody's starting to get on the bandwagon right here. And we look at the various indices. We know that the Nasdaq has just been the one that's been hot for months here, and finally had a flat week. But the transition is that the Russell, which had been the real laggard, is up just about 1.5% on the week. Dow is up 2%. So there's a bit of rotation going on in here right now. And, if things can only stay stretched out for so long before they start to come back. And, some of these individual stocks, though, have been on quite a little tear. Some of them that were looking overbought, like Tesla, put this deal together now with GM in terms of the charging stations. By 2025, GM will be part of the package along with Ford. So Tesla had a 7% day to finish off the week, and this one into that real exponential phase right now. Who knows how far it runs, but that's pretty much the hottest one out there at this point. Been looking too at the consumer discretionary versus the staples. And for the last month, this whole month of May into June, the discretionaries have really been on a tear, outpacing the staples, sort of your Procter and Gamble's, and that's starting to show a bit of an extreme right now. So clearly, if these markets were ready for a pullback, this would be the normal spot to see it. And from a seasonal perspective, this stretch from here into July is a pretty normal one for the market to take a pause. The sell in May and go away idea is that really that the markets don't necessarily fall so much, but that they run out of steam. So that wouldn't be at all surprised to see a bit of a correction as we move into through the month of June into July.
What's going on with gold and silver?
We're sitting right on a really important support line in gold coming up from the lows that we had back in November. Been a pretty quiet 10 days or so here, broad ranges, but overall, no big net price action on the upside. Same type of thing in silver. Silver was a little stronger during the week, but there's another one where the seasonality here, just starting right at this point, is where you would expect to see a correction. And when I look at my big model of the trouble that we're having getting through this 2,000 level, just as we did at 1,000 and we did back at 200, this would be the spot where a correction would be just apropos as we set up for the next decent rally. And thinking that as we find maybe a July low out here, that the precious metals, the bullion, as well as the miners, could end up with some really nice buying opportunities. The other seasonal that is setting up is in the crude oil market, where we continue to be bound by this $70 low and $75 high, and closed off the week at about 70 and a quarter. The optimum still is that this decline that we've been into for for this full year would ideally finish off with one more washout on the downside before it's capable of a decent move on the upside. We've got all the parameters set in place. We just have to wait and see if they do manage to kick in.
What's going on with the U.S. and Canadian dollars?
Canadian dollar got a little bit of a pop this week when the Bank of Canada raised rates by 1/4 point. Still, though, not able to get through the 75-cent level. It's closing at about 74.90. And, the Fed next week is not expected to do anything as far as the U.S. rates are concerned. So, this has been, a buoyant stretch for Canada. It's been, held back maybe because of the price of oil, but on the buoyant side of things, the grain markets, which had those really big commitment of traders numbers, really positive ones, the better part of 4 to 6 weeks ago. They've had nice rallies off the lows. We've got, I guess we're up 8 to 12% in the beans, the corn, and the wheat. They've managed to get up to some decent resistance levels. A bit of a pause here for this last week or so, but there's still, I think, some power to be had there. That could sort of offset maybe the weaker oil market and just keep the Canadian dollar with this lid at 75 as far as I can see right now.
Ross, thank you so much for the update.
Always nice to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. Find him on Twitter at ChartsByRoss. Coming up, Mark Leibovit, next on This Week in Money.
Always consult your investment professional before making any investment decision. Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He's speaking to us from Arizona. Mark, welcome back to This Week in Money.
Yeah, glad to be back. At least down here, we're not experiencing any of those Canadian fires, though I'd like to chat about that. I wasn't aware that it was all through Canada, and we didn't have fires here in the U.S. I know here in Arizona we occasionally get some. We had smoke the other day of some kind of smaller fire, but it's just amazing how the green group, the people that are trying to control our environment and our air, are just dismayed by an event like this because they can't do anything about it, and it sort of brings forth the power of Mother Nature, particularly as we were chatting off the air. I mean, And that was a very interesting comment you had made, and maybe our listeners who would like to hear more about it. But, I talk about the 43 active volcanoes on the planet and the possibility that, a lot of that water, our ocean water, could be heated, as you indicated, by the volcanic activity, and that could help contribute to the El Nino type effect, which could help translate into the climate changes or weather changes that would precipitate these type of fires. Mexico just experienced a little bit of eruption that disrupted, their world over there, and we're sitting here, I try to look at the bigger picture stuff. We're sitting here worrying about Donald Trump being charged with their 37-count federal indictment, which is, you really get me going on that subject because it's basically a political war underway here in the U.S. But, the real stories out there about the world and the environment, it's like when these smoke fires came down to New York City in the Northeast, that's all they were talking about. It's like that's the headline in the news. Airports are having trouble, and, basically our world is affected by a lot of things besides, a Trump indictment or what the Federal Reserve is doing or not doing. And, this whole section this week, actually I highlighted in my newsletter, we talked about on these broadcasts numerous times, the Carrington event back in 1859 about the giant sunspot and the effect it had on the Earth back then. Of course, it was limited because we didn't have all the technology, but it's really highlighted, and if you check my newsletter, you'll see the article. But, there is this sunspot activity occurring now. In one day, the planet could be, changed completely. I mean, we get an event like that, our technology is down. The smoke that people are looking at in the Northeast, that's irrelevant now compared to what would happen in terms of loss of communications and services. And we have active volcano activity on the planet now. And we have all these cool things going on. And, of course, from the geocosmic perspective, I've been writing and talking a bit about this for a while. As you know, the summer solstice coming up here in about 10 days. I mean, that's something too. I mean, last year this time, just about now, the market started heading south. So let's see if that works out.
Yes, and of course, one of the world's most efficient firefighting aircraft in the world, the Martin Mars, is grounded. Governments don't want to hire it. Apparently, it's politically incorrect to use a 1940s aircraft that can put out 4 acres of fire at a time and only takes 30 seconds to fill up. It's also one of the few aircraft that has what they call a glass cockpit, so it can operate at night when other firefighting aircraft are grounded as well. At one point, the owner offered it for free to the BC government for a day, and they refused. So, who are these people in charge of fighting forest fires? I think it's a huge industry, and they're using little planes, so it takes longer to put out the fire, so they make more money.
Okay. Anything to, as I say, follow the dollar, right?
Yeah,
that's really
follow the dollars.
Yeah.
Whereas I think, and this is my appeal to Elon Musk, if you're listening, and why wouldn't he listen to us, Mark? He should. Is that help us build a fleet of these giant airplanes with modern turboprop engines, 10,000 horsepower engines that could carry that water swiftly and safely, because most forest fires, there are bodies of water somewhere near them, and don't forget, the Martin Mars itself was designed to carry troops and torpedoes and so on from Hawaii to Tokyo, so it's got a bit of a range. And
it's interesting stuff. I really appreciate hearing some of the stuff because
and if you're not using it here, there's always somewhere in the world that needs forest fire fighting capability. Spain, Australia, France, they have big fires. Now, getting to the markets.
Just getting started, we'll be hearing a lot about that here in the next few weeks. It's only, June 8th, so.
Maybe we should be looking at gas mask sales.
Oh, I got a few of those sitting in the closet from way back. Got them from Israel many years ago, just in case I ever needed a gas mask. Never needed it, though, but I have them in the closet, so.
I've got a Mark II gas mask from 1942 manufactured in Idaho.
Wow. And that's used for the forest fires,
no, I use it at Halloween. It scares the kids.
You're right. I should take it out and use it as my Halloween mask. You're right.
Now, on the stock markets right now, AI Mania I'm seeing companies just throwing the letters AI onto their company name now, hoping to attract funds. Is this similar to the dot-com frenzy of the 90s that ended with the 2000 dot-com bust?
I believe that, but I don't think it's gotten to the scale yet that we were, back in 2000, where you had, dozens and dozens or hundreds of companies all talking about .com, and, it took a little while. It took, actually a few years. It started in the mid-90s and culminated during that 2000 peak, and this just started recently, so maybe it takes a little longer before the big collapse unfolds. But yeah, they are touting it. I'm not saying it's not important or something useful, but it's all the financial reporters can talk about. And I saw a top when they blew off a few days ago when NVIDIA had that big top, and we made a big comment about it. We were going to put a short sale out on it. I didn't do it. I should have. There was a nice 50 points to the downside really fast in the darn thing. I'm not a fundamentalist. I'm sure these companies are going to make money using the technology. You got to trade the stocks. It's like anything else. If you want to be a long-term investor, I liked the video when it was 300 points lower a few years ago when I went to the Consumer Electronics Show and I saw the company. It looked interesting. So, it's overdone here a bit, and you can still trade them. You get a nice break in the stocks. If NVIDIA can get down in the mid-300s, maybe we'll take a look at it for a trade, but it's just another thing that Wall Street is using to attract capital and keep people in the markets. It's just part of the game, and next there'll be something else. You just remember not too recently, we had the cannabis stocks really hot for a few years and making a lot of money for a lot of people, and there's sectors that all have their day in the sun. So this is I don't want to dismiss it that it's not important or anything, but when everybody's talking about it, you can be sure that you got to be careful.
Oh yeah, they always say if they're talking about it at a cocktail party, it's too late to get in. Now, is the U.S. stock market propped up by just a few companies?
Absolutely. We know the names. It's Microsoft, Meta, which is the former Facebook, Tesla, Microsoft, Google, the Apple. So used to be the Nifty 50 back in the 1960s and 70s. Now it's the Nifty 5 or 10, and no question about it. But recent sessions, we start to see some of the Russell 2000, which stocks. It's the 2000 index, which really lagged here in the last several months, show a little life. So it looked like the market was trying to broaden out here a little bit. I think we're just setting up for another big sell-off when we have the presidential cycle due in the fall. You might get a little bit more of a rally into July, perhaps. The sector that I favor, frankly, is energy. I think a lot more is coming there to the upside for crude oil and so forth. So, I'd be careful here into the fall. I think we're just setting up. In fact, if I'm right about the summer solstice coming up next week, the week after, we can get a nice little dip here next week or two. And of course, everybody's holding their breath for the Fed. And I start choking up when I start mentioning that word because I know the whole thing is, one big falsehood. But they're hoping that they do a pause and they don't raise rates, and that's supposed to be bullish, which isn't, because they're going to raise. They don't raise next week. They'll raise on the following meeting until they feel they've done enough damage to the economy, which apparently is their target. They want to bring employment down, which is not the goal of the Fed. The Fed charter says they were created for full employment. They're violating their own regs. So it's the whole thing is just crazy here. What's going on? Talking about the AI, talking about the fires in the East, talking about the Trump indictment. Talking about what the Fed's going to do or not do next week. We had the budget ceiling confirmed, but it's a joke, as we all know. They're still raising the debt. We need to get rid of the debt. How can you ever get rid of it, right? You got so many social programs out there that depend on the government supporting the populace. It's not going to end well. Dollar ultimately is going to collapse at some point. There's all this. What's also going on there's all the attack now on the cryptos. Was it Gary Gensler at the SEC going after Coinbase and Binance, another company, which is more nonsense. It's like the government just sticking its nose and its hands into everything it can get its hands to cause destruction. Of course they want the cryptos out of the way because that's the hedge and protection against the government itself, just like the government wants to ban you having cash, just like back in the 30s when they banned gold. Anything that takes away some of our freedoms, they're after. So the list is just nauseatingly long here about all the things that are going on, which are just so irrelevant to free speech, to a free economy, and that's why we talk about Carrington events and volcanoes, because sometimes we have to learn lessons from Mother Nature.
Is there a huge disconnect between the U.S. stock market and the real U.S. economy?
It depends what business you're in. If you're in the LGBTQ group and your doctor's performing surgeries on young children and changing sexes, which obviously I'm totally against. And we also learned that going woke, you can go broke with some of the big name companies out there like Disney and so forth. But some of the doctors that are performing some of these surgeries and operations, from what I understand, are having a bang-up year financially. So, for some groups and some people, obviously you can do well. And I'm not discounting that business is bad for everyone, which is, I don't think, the case at all. I think the problem is people are still optimistic, want to spend, they want to do business, despite the fact the government wants to put a lid on it for its own stupid reasons. I mean, they mismanaged the economy for decades with government spending and with Federal Reserve policy, and they suddenly decide they want to do something to change it. But the average person on the street is out there trying to make a living, grow their business, and there's always going to be opportunity. What we have to do is get rid of the Fed, get rid of Powell. We need to get rid of congressional spending. We need to get the government needs an enema. I mean, maybe that should be the title of this presentation today. The government needs an enema. We need to get rid of a lot of the agencies, the IRS, the FBI, the CIA. Go down the list and just clean out all these people, do a nice enema, including Gary Gensler at the SEC and Powell at the Fed. And, maybe our society and our economies would do a lot better and continue to survive without these obstacles along the way. It seems like every time there's a crisis like the COVID, it's an excuse for government to step in and create new regulations and more enforcement when they need to be disbanded. That's really the truth. So, I'm a bit angry about it, but doesn't mean that's going to change anything. But if enough people are, there could be revolution, social unrest in this country. We had the Civil War in the U.S. back in the 2 centuries back, and they do enough. In fact, one of the things I did today in my newsletter, because of Trump and because of all these things, I recommended the gun stocks, again, Sturm Ruger and Smith & Wesson, and, you get enough people upset, things could get pretty nasty. I think more civil unrest is in the future, the more government continues to do what it's doing, and the insane Democrats that are trying to change a potential election in 2024-25 because, they're losing votes, because they have a quote-unquote criminal in the White House who is not being charged, but someone who's not in the White House is being charged. Enough people get upset. There's going to be changes, Jim. I hope that we don't see the violence that I see potentially coming, but they keep it up. It's going to happen.
Also, the drive for higher corporate taxes. When Stephen Harper was Prime Minister, he lowered the corporate tax rate, and government revenue went up because so many companies moved their head offices to Canada. So
you go where money wants to go, where it could be successful. I mean, I think that's what it comes down to. If you have enough regulations or bad government, money moves, and they keep doing what they're doing. Look at Japan. They got still 0 interest rates there. The EWJ, which is the ETF for the Japanese economy or stock market or whatever you call it, has been rallying, doing well. Obviously, different people have different views on how to have a successful economy. Now, of course, Japan controls the stock market. Maybe they have that to a certain degree here in the U.S. They're not telling us that, but the U.S. Fed does have the power to go in there and probably has been, and there are some documented events. But Japan controls, I think, about 70 or 80% of the stock market over there, so they're going to keep that strong regardless. And different ways of managing it. I don't know. I'd rather have Canadian money and dollar than the U.S. dollar, because Canada is a resource-based economy. We need the oil, we need the forests, we need the gold and silver, we need the zinc and the platinum and palladium and uranium and all the good stuff, lithium and all the stuff that's in a resource-based economy. That's really why Canada is strong. And I think honestly, I'd swap my U.S. dollars for Canadian dollars anytime on a long-term basis, because just because of what Canada represents, and what the U.S. doesn't represent, unfortunately.
Well, right now, the Liberal government is against mining. It won't approve new mines. Where are we going to get the lithium, the copper, the nickel for all these batteries for electric cars?
Yeah, well, the U.S. government's against, drilling for oil. And, what's going to happen is, prices are going to accelerate to the point where you can't produce the things that the Liberals want to produce, which includes the EV supposed boom. The cost will be extraordinary, if not even doable, because the materials won't be available. This is why I'm bullish on crude oil. I think it can go to $200 a barrel in the next few years, or maybe sooner, because you keep shutting down the ability to produce it. There's still unbelievable worldwide demand and need for it, even to produce the EV vehicles. They're just stupid. It's like Germany shutting down the nuclear plants. They'd rather burn wood in their fireplaces all winter and freeze and not have power than use common sense technology, which exists. In fact, I think Georgia, the state of Georgia here in the U.S., just approved the first nuclear plant in decades, which was encouraging to hear. We need to have more and more of this stuff, not less and less. So what's going to change these idiots? I mean, do they have to freeze their butts off in the winter and not have any power or food, and realize that they shut down industries and mining and energy that they really needed? You just need an administration change, or perhaps you need some civil unrest to get rid of these people.
Well, in Canada, for example, Vancouver City Council voted against a proposal to ban natural gas lines, and BC is awash in natural gas, 200 years of proven reserves.
It's, what can I say? Mental illness, it's a disease. It's contagious, apparently. I used to argue for years, people that move to California, you get out there and you drink the water and you go nuts. Apparently the water is the same kind of water, perhaps now in parts of Canada, and we know it's in New York. Liberalism is a mental disorder. Michael Savage wrote this in his book over a decade ago. And, you thought it was an extreme comment. I just think it's mental illness. And, is it curable? I don't know. It seems to be spreading.
Well, San Francisco people are abandoning the city. I think somebody, as a joke, put up a billboard, last one out, please turn off the lights. Or if they haven't, someone will. Is that going to happen to a lot of American cities? Where
it's happening now, yeah. I mean, they're leaving the big cities, and they're talking about, ultimately, does that make... here in the U.S., you're going to have a breakup of the country. You're going to have, a blue and red states, a sort of a secession, as we had during the Civil War here in the 1860s, where suddenly, California, New York become a new country or separate countries, and everybody runs and, does things as they wish in their own areas. But ultimately, that's going to happen because money and smart people, a lot of them moved here to Arizona. I see a lot of California plates here. They want to get out of the insanity in California. I see ads on TV, too, trying to induce people to come back to California. But these kind of policies, it's just mental illness. I don't know how to describe it. There's no logic behind it. Supposedly it's to gain votes and power. But then what's left after you destroy the state or the country? If you don't have the energy resources, you don't have the mining, you don't have, they don't even manage their forests correctly in California. We heard that because that's one of the reasons supposedly the fires were so bad a couple of years back, because they weren't even doing that. So it seems like the weakest links are at the top of the ladder in terms of mental ability and common sense. And that's perhaps the real people that have the ability and the common sense are out there making money doing real and powerful things, but they don't want to get into politics, so they leave that to the imbeciles at the top to do it. But we got to get rid of the imbeciles. That's the problem.
Well, the two biggest, most important jobs on the planet, parenting and politics, you don't need a certificate or any education to do either one.
That explains it. You got the answer. So, yeah, there's no textbook on parenting or being a good leader. Maybe there is one for good leaders somewhere, but it's just so frustrating because I think I'm sensible. I think I got my head screwed on straight. I understand and study history. I know what happens when you ignore previous patterns and see the results. I mean, the political attacks here in the U.S. are out of the books of Stalin and Hitler and other places where they try to control votes and politics and the direction of their countries. Gun control, of course, is the big one. If they try to get rid of the guns, then you've lost the country altogether. So, I mean, we're following. You got to be a student of history, and unfortunately, education system likes to rewrite the books and edit out things in the educational process, so people can't, unless they really dig and do their work, really don't understand that things do repeat. History does repeat, or rhymes, and as many people say, and it's starting to happen now. And I'm honestly, I know the stock market rallied a bit, and we trade stuff, and there's, I guess there's always some place you could make money. You don't have to do it in the U.S. You can go hide in, Taiwan maybe until they blow it up, someplace else. But it's just frustrating the way society and where culture is going. Of course, big companies. I threw this out at you a little earlier about the woke situation. I know people don't like me talking about it, but you go broke when you go woke. I mean, look what happened to the Bud Light sales just recently, and Target just had that scandal with the boys' underwear, and Kohl's, and of course Disney. They're stock down 50% and so forth. So, ultimately, people that are in the business to make money going to hopefully get rid of these people, and the people that are running the governments that are destroying their economies, they'll be thrown out by the people who realize that you can't profit with those type of edicts and attitudes. So I have to be, I guess, reasonably optimistic at some point. Common sense will rule, but I don't know how fast that's going to be, Jim. When enough people are suffering from the stupid actions, then maybe that's what it'll take. Or enough people leave California or New York or all these places and they can't function anymore, then maybe that'll change it. So it's wild times out there. But there's one thing about the market, though, and I lecture about this a little bit and get off on a tangent. I remember like 50 years ago, I was saying to myself, what if the market goes to hell and you can't make money in the market, or something happened, and in all these decades, there's always something. It's like Jim Cramer says on Mad Money, there's a bull market somewhere, and we'll help you find it. There's always some place, and if you're just thinking about money, I guess this is part and parcel to this recording and this interview, as long as they don't take away the markets from us, and if they take it away here, it'll be someplace else, because money, even the communists in China want to make money. There'll be markets trading somewhere on the planet, and if you study and you're able to use some common sense and you're interested in making money or finding opportunity, the markets are there one way or another, in one form or another. So, if you couldn't make any money in, utility stocks or in consumer stocks, for example, you jumped into AI the last few months and you made some money there, or there's always some place. So that's sort of the encouraging part of this conversation is, in a way I sort of isolated myself because I'm watching the markets. I work out of my home, and I've been doing it for decades, and for some reason we always seem to find a way to make some money. So if that's the bottom line, that's fine. I just don't understand or like the cultural changes and the political changes that are occurring around all this. And, there's not much I can do to change it, but I'm definitely going to express my opinion about it. And meanwhile, markets are here, and hopefully we can pass some good ideas on to our listeners.
Well, I know you like to rant about the Fed, and I think when they say they control the economy, it's sort of like they have a bobsleigh, but the strings between them and the skis in front have been cut. The sleigh's going to go where it's going to go no matter what the Fed tries to do.
We need a free market. We need to get rid of the Fed. The free marketplace will determine interest rates, the way it determines valuations for stocks or anything else. And, that's it. We have just too much government interference. I mean, they mismanaged the money situation, the money policy, I guess, is the framework we're looking at since 1913 when the Fed was created, precipitated numerous recessions, raised interest rates during the Great Depression in the 1930s, which helped make it worse. Even Ben Bernanke, the former Fed chairman, confirmed that. So, again, we have imbeciles up there. And the more economists you have managing the economy, the more likely the mistakes are going to be made. You need businessmen like Trump or Elon Musk or people that understand business running the government, not these politicians and economists. But, yep. Are they going to get rid of it so fast? I think in time it will. I don't know if I'll see it in my lifetime, but enough mistakes have been made. There are going to be some big changes, but we'll see.
Do you think they'll have to do something like they did after the Second World War, where all the government debts are forgiven at the same time and start from zero again?
Anything is possible. Wasn't there that story just recently about, of course, they've had this same story several years back about the Treasury creating this platinum coin that was worth $1 trillion, and they go out and just mint this crazy coin, and that would be used to pay off the debt. It was like self-funding itself, and it doesn't, I don't even understand how that would work. But there's been a lot of these rumors and stories about that. They'll just print or create this multi-trillion-dollar coin and say it's worth that, and we're going to hand it from the Treasury over to the Fed, or the Fed to the Treasury, and overnight there won't be any debt anymore, and it'll be just a financial, bookkeeping and manipulation, and says, hey, we don't have any debt. What are you talking about? We just paid it off with this crazy coin that we minted. I mean, the insanity, again, is so great that anything is possible. Look, they want to get rid of student loan debt. They want to they can legislate out of anything, but does that really change the facts? The facts are that there's still debt out there. Some people that were owed the money won't be paid. They're going to suffer to a certain degree, and that's going to filter down in other ways. So if you wipe out debt, what happens to the debt holders? How do they come out of this, and what impact does that have? The debt's there. I'm not saying debt is good, but if you have it, you're responsible for it, or you shouldn't be creating it to begin with. Unfortunately, we just have so much social demands in this country and other countries themselves, and they just don't generate enough income to pay for it, so they have to just keep legislating, increasing our debt. But it's sort of funny, I don't have all the technical details and I can't provide all of them for you, but essentially, the Fed just sort of creates money digitally at the push of a button. Even, I remember Bernanke having a conversation about that not too many years back. They actually just create money. I mean, we talk about collecting taxes and having IRS agents out there collecting more money from people. But, on a push of a button, instantly the Fed could create billions of dollars and say, we just created some money digitally, and we're going to send it over to the banks, and we're going to bail them out, and we're going to loan them money that really doesn't exist, but we have this computer that allows us to digitally create money. So the whole thing is just so confusing and stupid when you think about it, and we really don't hear much conversation about this. Yeah, we collect taxes from people, but yet the Fed can create money instantly. So what does that all mean? It just means like the money you have isn't worth very much. And this is why people have moved to crypto and gold and real estate and natural resources and things that have real value and are really useful and needed. And ultimately, this all leads to the demise of the currency, which ultimately will happen in this country. The dollar's held up a little bit now, but I don't know, it's not going to go away so fast, but the rest of the world realizes this, Jim, and that's why we're hearing about alternate currencies, because of the bad job we're doing here. bottom line is own Canadian dollars, I think, because that's where the resources are.
Mark, is there such a thing as a safe haven if you're not sure about what's going on?
Yeah, having your own farm, your own way to generate your own power and food, and that's the only real safe haven, I guess, ultimately we have. If you could live off your own, you know, your own skills, whether you grow hydroponically, you grow in the soil, you got your solar panels up, you got a well that's running off solar power, pulling the water out of the ground, and you can self-survive and have some animals around and enjoy life. That's the greatest wealth of all, because you're not dependent on anybody. And you know, I mean, the stock market can go to zero or go to the moon, but it wouldn't change your lifestyle either way. So to me, you know, my ultimate vision of happiness and security is not having the need for any money and be self-surviving and enjoy your life. I mean, honestly, because all those things can go away really quickly. You could be fully invested in the stock market, and you can see it's wiped out 50% in one big bear market, or it can be worse if something more significant happens, and you can lose all your physical assets. But at the same time, you're dependent on power and food and everything else, energy from sources you have no control over, and you're really up Schitt's Creek. So, you know, you could be dead as a result of not having that independence. So I think being independent away from the system is one of the keys. You know, for me, it's been a goal for mine for a long time. I was real close to it at one point in my life, and I'm working back to get to that point. But when you see the things change the way they change, and valuations and change, and government doing ridiculous things like hiring IRS agents to try to take all your money, I mean, you know, what's the point of working? You know, you might as well work and build your own little community and self-survive, and that way you don't have to be dependent on the rest of the world, so to speak. So I don't know. That's just one thought. You asked me the question; it just came to me. That's sort of happiness for me, because, you know, you can be in gold, and gold could collapse in value because of a government suppression or manipulation, which has been going on for decades. You know, the control of the financial markets on the part of the governments is just unbelievably powerful. And there's been so much documentation about it: manipulation of equity markets, commodity markets, currency markets. It's too much government. You got to be more independent away from the government if you can possibly do that. So I don't know if it's a dream that it can exist for some, and maybe for others not, but that's how I see it.
Mark, do you have a special offer for our listeners?
Well, we could do 50% off for the listeners, and we can do 2022 half off as the promo code at vrtrader.com. And I didn't disclose earlier that I'm not a financial advisor, nor do I provide financial advice. I am just a newsletter writer, and I guess a little bit of a socio-political commentator at the same time. But, watch the skies, too. You know, we've got solar flares out there, and we've got the summer solstice ahead of us here a little bit. So let's see what happens there.
Mark, thank you so much for being on This Week in Money.
Thanks for having me. My pleasure.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. He was speaking to us from Arizona. Coming up, Ian Prittie, next on This Week in Money.
Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclicode.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Ian Prittie. He's speaking to us from Toronto. You can follow him on Twitter at the Reds8. That's the Reds and the number 8. Ian, welcome back to This Week in Money.
Great to be with you again, Jim.
So how are the skies over Toronto as we speak?
There's quite a bit of haze, and I had some, the client I'm supporting right now, they had some people come in from the States, and they had a bit of a question about whether they'd be able to head back to Newark, New Jersey because of the smoke situation here. So it's been a pretty strange week, that's for sure.
On Wednesday, the Bank of Canada raised its rate again by a quarter point to 4.75%. Could we be moving back into an environment of rising interest rates?
Well, I think where we are now, I think the bulk of the increases certainly happened last year. There's an interesting divergence with what's happening in the States because the Fed, of course, meets next week. I think they will not increase because there's a site on Twitter named Trueflation that's measuring real-time CPI, and it's showing that U.S. CPI is actually below where it is. Now, I think Canada has the opposite problem. The Bank of Canada is signaling that at least a couple more rises are needed, but I think we're probably closer to the end than the beginning. So I would imagine something like maybe 2 or 3 more increases, and that will probably be it.
Well, I would think the economy is already slowing because they expected about 11,000 new jobs in Canada in May. Instead, the numbers showed we lost about 17,000 jobs. So we are slowing down. Will the Bank of Canada not be happy until millions are unemployed?
Well, this is why I think the central banks are really caught in a very serious trap, because they have to deal with inflation, but then if GDP and unemployment falls apart, normally they would want to have more accommodative policy and potentially cut and get back to quantitative easing, and they won't be able to do that if inflation is still a problem. And the Bank of Canada certainly still has that problem. I don't think the States maybe does as much, but they cannot cut rates with inflation where it is. So this could lead to a big disaster for sure.
How long does it take for interest rate hikes to show up in the economy?
There's definitely a lagging effect, and it certainly depends on the sector. I mean, real estate has got this outsized contribution to the economy now, and of course, as the Bank of Canada started the rate rising cycle last year, it started to put a cap on the craziness, especially here in the GTA, and I know Vancouver's been quite similar. But in terms of filtering through the whole economy, it takes a while. I mean, it's anywhere from like 9 to 18 months, but we're probably at that point now where we're going to, as you're saying with the jobs report, we're probably going to start seeing some effects from it very soon.
Does inflation help or hurt home prices?
Inflation is the best thing ever for home prices, because when you have these ridiculous debt and deficits that we've been running and all kinds of money supply being created, it's going to wind up in real assets. And that's why housing, of course, is disconnected so radically over the last 10 years. So anyone involved in real estate would want as much inflation as possible, because their return, especially if it's leveraged, will way exceed whatever negative effects they have from inflation.
You're calling for price drops in Canadian home prices. How far are prices likely to drop, and what's your prediction based on?
Well, at the very beginning of this, I warned that about the beginning of 22 that was the top, and I said that median prices in the GTA would fall 75%. I think from this point, since we've already had a bit of a decline, although in Ontario the GTA is sort of the last to get hit because of all the interest in buying here, but I would say from where we are today, median price will probably drop by 2/3. And I think it's primarily because two things is the long-term trend line of where median price is supposed to be. We're so far above that, and the other big factor is it's got to reconnect with after-tax income, and I think a 2/3 fall is needed to get us somewhere close to that.
How are the home price drops in the bubble cities likely to compare to the rest of Canada? I guess the bubble cities would be Vancouver, Toronto.
Yeah, it's going to be very interesting because, of course, the additional pressure that we have here is, of course, all the immigration. So you've got the federal government where their immigration plans were somewhat curtailed during the last 3 years, and the restrictions on travel, and now it's gone through the roof. And we don't have the infrastructure here or the rental capacity or hospitals or schools, and so there'll be a lot of interest in buying, but I just think with credit tightening so much, even if someone wants to, it's just not going to be a possibility until prices are much more in line with after-tax income.
Yeah, Canada's population went up by about 1 million last year, 95% of that immigration. We didn't have enough housing for the people already here. Where are we going to find room for these people?
Well, it's a zoo here. I mean, I read one article talking about 100 rental towers going up in Toronto every single year. I mean, there's more construction than I've ever seen, and the goal is, of course, to get everyone renting and in huge towers in the city, and they're certainly doing that. But I think I've talked to a number of new Canadians, sort of in the last few weeks and few months, and they're very discouraged. They moved here. A couple people I talked to from India where they thought Canada would represent a great opportunity and so forth, and they're looking at the cost of everything in the GTA, and they're like, this is absolutely ridiculous when I could go to the United States and so forth. So I think they're really rethinking their plans.
Is credit constriction or rising interest rates more of a concern for home prices?
I think both will play a role. I think when the banks start to get skittish about their book and their loan exposure, that will play a role too. I think that will come into the Heloc discussion at some point. But anything overall, I mean, if corporate credit gets constrained and that leads to higher unemployment and that cuts off some of the cash flow for people trying to deal with vastly higher mortgage costs per month, it's going to be a real issue. But I would say if I had to pick one, it's certainly the rising interest rates, because the Canada 5-year bond is really what mortgages key off, and it's just going through the roof, especially this week.
What's happening with business credit and commercial real estate?
Well, commercial real estate's very interesting, and there's some discussions in the States about how, with all the remote work, and we just had that story from San Francisco just in the last 2 weeks of 2 major office towers being abandoned. They're starting to talk about converting commercial real estate and office space into condominiums, and so I don't think the demand will be there anymore. We've clearly gone to an environment where many want to work at home, and I just don't think it'll have the same enthusiasm that it did up until 3 years ago. And in terms of the business credit outside the real estate sector, that will be very serious. If the banks decide to constrict that, then that will certainly lead to more unemployment.
What are the construction indicators predicting?
Well, one figure we have from Ontario is that in the long term, construction was usually in the high single digits as a percent of the economy here. So it's something like 8 or 9% historically. And it's gone to either 20 or past 20 sort of in the last few years. So there's this outsized contribution to the economy from construction. And it's clearly not sustainable. The prices aren't sustainable. As I mentioned earlier, I think there'll be a lot of people realizing they can't afford to be here. So they'll make other plans. And then you see the figures, like for single-family build, like there's just not enough being built. There was something that came out 2 weeks ago with various regions around Ontario and the quotas that were supposed to happen for house construction, and it's behind. So it's just an incredible stress that I don't think can really be managed.
Mm-hmm. Now, I recently looked at a story where hotel developers in the U.S. are constrained because the construction companies building their hotels can't get loans now.
Yeah, exactly.
Yeah. Is debt, and more debt the elephant in the room?
I think absolutely. This is the end of the 20-year cycle that we've had of central banks going crazy, and I think it's all going to come home to roost. There's way too much public debt. There's way too much private debt. There's way too much debt in in real estate, and now that inflation is a factor and the central banks will have to deal with inflation, I think this is the end point. I don't see a possibility other than a pretty severe correction.
We were talking about construction being too large of a sustainable segment of the economy. China's economic growth numbers, when they were phenomenal, they would always say we're predicting 6.7% growth, and of course a year later precisely 6.7%. And it was all because of those artificial cities they were building with nobody in them, and now some of those buildings are so old and decrepit they have to rip them down. And I guess they'll start rebuilding them again, saying this is another big boost to our economy, when nobody has moved in and nobody lived in them in the first place.
Yeah, exactly. And then the latest news from China was that their exports were down 7.5%. And of course, we're the ones, like in the West, America here, Europe, the United Kingdom, that are supposed to be buying those goods. So I think it's even a worse sign for our economies than theirs. But a plunge of 7.5% on exports is really serious.
Now, I live on part of the waterfront in Vancouver, where there's a container terminal. At this very moment, there are no container ships at this port, where normally there would be 4 or 5 ships docked there. What is that telling me about what's happening between us and Asia?
Yeah, well, I would say it's probably symptomatic of fewer imports coming in, and so if there's less demand domestically, unless there's some kind of supply chain issue and they just couldn't arrive, I would say it would probably point to lesser demand, and I think we're going to see that in the next few months.
Could home equity loans become a danger, Helocs?
I think absolutely, because the big difference there is that they're demand loans. So unlike mortgages, if you're paying your mortgage every month, then everything's fine. But as a demand loan, the bank can decide to pull and claim all of it. And so I think this is going to be one of the flashpoints where if there is continuing banking credit tightening, Heloc will definitely come into focus, because a lot of people have used the rising house prices kind of an ATM, and they've been irresponsible, and they put things like a jacuzzi in and a stone pizza oven in the backyard, and I think it's really going to be a problem. And the interest rate on those now, especially after the Bank of Canada increase this week, is really getting serious. So I can see a big problem with Helocs for sure.
Could real estate turn into a market for cash buyers?
I think absolutely. Like if people have been careful, if they sold, I know a number of people who sold it near the top in late 2021. They're sitting on the sidelines and just waiting. And given something like 2 or 3 years, it's hard to estimate the time, but if we have a pretty serious correction by then, people who have no debt and great credit and a bunch of cash available will be in a great position to buy at the bottom. Absolutely.
Now, as we mentioned, in May, we lost 17,000 jobs. They expected 11,000 jobs to be created. What do you think's the real story behind Canada's employment numbers?
Well, what I wish, particularly when the media reports this, is that they would break it into public and private numbers. And this is what I try to bring up every time there's a job report. And I raise this issue on Twitter, because if the government's just creating public sector jobs, that's just adding to the debt. And it's not real economic generation. I'm not trying to malign, like I know we certainly need public workers, but for them to come out and say there's all this great job growth when it's just government creating jobs, it's pretty disingenuous. And I think they go to great lengths to not reveal that split. That should be front and center. Like how much was created publicly, how much was created privately. And private growth is what's needed, of course, to contribute to the tax base. And it's not been a good picture. We've seen this federal government create all kinds of public sector jobs while the private sector market has been pretty weak in general over the last few years.
Does today's real estate market compare to the real estate market of 40 years ago in the early 80s?
I've been comparing the whole economic picture now to the 80s, and of course there's some major differences. I mean, I think probably the biggest commonality is the inflation fight. I mean, central banks have to deal with something that really has been dormant for several, like really since the 70s almost. And so there's that similarity, but the amount of leverage that's being used today is nothing like back then. I mean, it's absolutely ridiculous what's going on. And so I would say there's similarities, and I think both will lead to a big problem. I think it's already underway, but this will be far worse because of all the debt that's being used.
Of course, I remember back in the early 80s, the Canadian savings bond paid 21% interest.
Yeah.
And I scraped together every penny I could, and it helped pay for a university education when it was cashed in. Could anything save the Canadian real estate market from crashing?
Well, everyone's obviously, we talked about the interest rate cycle earlier, and I think it is probably closer to the end than the beginning in terms of increases. And of course, what everyone's waiting for is, will there be this rollover? But that I think would indicate far more serious problems, like meaning that I don't think people should go out and use a ton of leverage to buy housing, because if that happens, inflation will explode, and it means the economy is like completely falling apart. And so there's no way in that scenario that buying real estate at that juncture would be the right thing to do. I wouldn't think. And it's one of those unusual times when that would happen, because of course usually when rates begin to fall, it is a good idea to be long real estate. So I don't think from a bubble, again, I would always point to these things are, especially in the GTA and certainly Vancouver, are trading as a completely separate asset class now. They have no connection to people's incomes whatsoever. Like, it's not even in the same universe. And so I don't see any way out of this other than a complete and very deep and serious correction, even with the immigration numbers. It's just not a possibility.
Are booms and busts manufactured?
I think there's some very strong evidence that they are. And one thing I can point to is that if you look at a graph of U.S. CPI, it was very obvious right as 2021 began that it was spiking and was already a big, big problem and was only going to increase. And the U.S. Fed waited over a year to begin raising rates. And so there's no way that they didn't have that knowledge, and there's no way that they didn't know that rates shouldn't be rising. And a lot of people, it's funny because I noticed a lot of similarities to our favorite health issue of the last 3 years, which is that you'll get some very clever people, and people I generally respect very much, describing this stuff as policy errors. But of course, I'm not of the view that it's an error at all. I think it's intentional. I mean, you could get someone in university just beginning to learn about economics who would look at that CPI graph and say rates absolutely have to rise, and they have to rise now to get in front of the problem. So the fact that they waited a year for CPI to get above 8%, now they have to crank them up aggressively, and did that for the most part in 2022, is just creating these huge jolts to the system. Like, as an example, the banking problems that have happened in the States already this year, with all kinds of deposits leaving and going back into money market funds that are starting to yield some better numbers. It's just so much stress and they didn't need to do any of this. If central banks had started raising in early 21, as they should have been, they would never have needed to, like Fed funds, U.S. Fed funds would not have needed to get to 5%. Bank of Canada would not have needed to get to where they are. We could have capped the inflation problem and the interest rate cycle, rising cycle, at a lower level, and it would have been much more manageable. So I don't think it's a mistake. I don't see how anyone could look at this and believe it's a policy mistake. It has to be intentional.
Is this all part of Agenda 2030, where you will own nothing and be happy about it?
Well, I think Toronto is currently very much part of the Agenda 2030 plan, because I mentioned the figure earlier of the 100 rental towers going up a year, and that's what they want. That's the vision. It's like you can't travel to 90% of the land, and everyone lives in the cities in these huge towers, and everyone's renting, and no one owns anything. And it's kind of what's happening. I mean, the newer Canadians have just arrived in the last year and just beyond are all in the rental buildings right near me, and they're wondering how they can afford anything. And it's kind of the vision. It's when every time people called this a conspiracy and said, well, that's crazy, this will never happen. I mean, it's kind of visible in downtown Toronto. So I would say it's a component of it is underway. That's for sure.
Yeah. How do you explain Toronto's high-rise mania? Apparently, there's more construction cranes in Toronto than the next 10 biggest cities in the U.S.
Well, this is where everyone wants to live. Apparently, there are a lot of days I ask why, but anyway, that's the dream. I guess that's the word that's been going out overseas. It's like Toronto and the GTA is where you need to be, but people are discovering that it's not what they thought it was going to be, and so and of course, government is completely clueless on all of this. There's been no planning, no ability. The province has not done anything to challenge the federal government on these immigration numbers whatsoever, and it's going to. I mean, it already is chaos, but there's going to be far more.
Now, in BC, the government's named a number of cities where they'd like to see them crank out more building permits, but we're constricted by the ocean, mountains, and the U.S. border in the Lower Mainland. There isn't really a lot of space to put these new things here. I guess in Toronto, you just keep going till you hit Montreal.
Yeah, it's kind of like this expanding circle, right? So the diameter just keeps increasing. I mean, I remember as a child, like Mississauga, there was hardly even any development, and of course now, like every single square inch is developed on, and it's gone further north and further west, and yeah, there's as Ron Butler says, is a mortgage broker out here in Ontario. It's like there's a lot of land in Ontario, so we can absolutely keep building on it. That's for sure.
Do you have any idea how we could solve our need for more places for people to live, affordable places?
Well, I think part of it, you have to look at the pace, right? Yeah. So the pace of construction has to match the number of people coming here, and that's one of the big factors that's way out of balance. And so a far lesser immigration level is obviously the first place to start, and a clear government plan to work with developers to do the kind of zoning, get the kind of housing and rental stock in place that people want in the locations that people want, and it's becoming very clear that none of this has happened. The government just has no clue.
And in Vancouver, of course, trying to get a building permit almost impossible. People tell me they line up at 5 a.m. By the time they get to the clerk's window, they're told, sorry, we're dealing with everything that we can. Come back again tomorrow and try again. And it can take years strange. If you do get in. Yeah,
it's very strange, right? Like you would think that government would make the process, would streamline the process and make approvals easier and permitting easier, and it seems like that's the opposite has happened, from what I understand.
Well, Vancouver's solution has been to hire more PR officers to tell us everything's fine.
Yeah, that doesn't surprise me.
Ian, thank you so much for being on This Week in Money. How can people find out more information about you or get a hold of you?
Twitter's probably best. I'm at the Reds8 there, or people can just search for my name. And it was great to be on again, Jim. Great to talk to you.
My guest has been Ian Prittie. He's been speaking to us from Toronto. Follow him on Twitter at the Reds8. That's the Reds and the number 8. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Mark Leibovit, and Ian Prittie. And thank you for listening. If you have any questions for the show or our guests, you can send them to info@housestreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of House Street Media Incorporated. Executive producer is Tom Allen.